2026 is shaping up to be one of the best years ever for Canadian natural gas stocks, and today I've got 3 stocks that I want to talk about. Each of them is uniquely positioned to benefit from one aspect of the hundreds of billions of dollars flowing into natural gas right now, the huge investments we're seeing in LNG, in AI data centers, and in everything in between. And each of them has a unique thing that's going to appeal to a different kind of investor who's looking for a different kind of return. Now, one of the things I want to talk about before I jump into those names is why this week I'm so much more bullish than I was before, and why my thesis about 26 is getting more and more bullish over time. And one of the key pieces of news that I saw this week was this. Now, if you hadn't seen this piece of news, it's because it flew right under the radar. And what we saw literally just on Monday was that Bish LNG, which is owned by the Haisla Nation, took over the BC permits and licensing of Kitimat LNG, which is a project originally shelved by Chevron and Woodside back in 2021. There is very little available publicly for us to know about what exactly Bish LNG wants, what it has planned. But there is something that is really, really important. And that is that this Kitimat LNG project was deemed to be substantially started. The permits are still valid right now to build this thing, to build a giant, and I'm not talking, this is not little, we're talking another 1.3 max BCF a day facility, another gigantic improvement in demand here locally in Canada. When you talk about those improvements in Canada, you talk about that massive amount of money flowing into LNG, you're talking about the money. Those are the guys that are going to benefit massively. And so the first name on my list today is Tourmaline. Now, anybody that follows the channel knows I'm a big shareholder of Tourmaline. I mean, it's a big position for me in my portfolio. I'm a believer in the company. I like what they're doing. I believe in the story long term, right? We've seen Mike Rose on just about every podcast over the last month. He is sharing what they're planning and how they're planning to put themselves as the scale player in a place to win. And I think one of the things that make me so bullish on them in the shorter term is that they stand to gain the most from massive increases in demand because they are in position to grow the fastest. They basically made a huge amount of investment over the last little while, including announcing huge investment plans that goes to things like optimization and infrastructure. And that investment is going to pay dividends if we see what we think we're going to see in 26. Now, I've got a post here that talks about 2 major pieces of news I'm watching for that I think are going to have a huge impact on the stock price here. First off, we're talking LNG Canada Phase 2. Second off, we're talking Silicens. Now, of course, we talked about both those things on the channel as things that are going to happen. But we are still waiting on the money being put on the table, which is what we call FID. And so are a lot of major money managers out there, the kind of folks that can't afford to take the risk retail investors can, right? I already have my money on the table there. I'm betting on Tourmaline long term. Doesn't really matter to me if I get the short term bump. But the big money, right? The fund managers, the pension funds, all those folks that are looking at this stuff from the sidelines, when they see those pieces of news hit the headlines, you better bet that's when those guys really start to get involved. And institutions have been starting to buy on the low, right? Tourmaline is not necessarily getting the gigantic investments that we've seen into things like CVE over the last little while from things like the CPP, but they have been getting significant institutional interest. And you've seen that because you've seen, BNN go on there basically any day of the week. This name is now a pretty common one. And so as a scale player, you're seeing more institutional money flowing into them. They have the ability to have a huge amount of torque to that natural gas pricing. They are very exposed to a variety of prices across North America. They are not so AECO or Canadian price focused as some other players out there, some of the smaller players. They attribute that to their larger marketing team. And again, go listen to Mike Rose on a podcast anywhere, and you will find a new appreciation for what this company does. And I think Tourmaline Oil is looking at some fantastic things. If we do see some FIDs come in 26, you're going to see some short-term price spikes. Otherwise, basically, every single time you see the price of ACO improve, every single time you see new LNG facilities being announced, every single time you see some of the 2 BCF of AI data centers that are being planned just in Alberta proposed, announced, you're going to see price movement. I would not be shocked to see this thing substantially higher within 2026. And this is a stock that is already not the cheapest in the industry. I'm not even going to pretend it's the cheapest in the industry, right? There are other players out there that if you were an analytical person and you were only investing based on where you can find the best value on paper, you probably wouldn't pick Tourmaline. But if you're looking for the stock that has the best story in the natural gas space, I think it's these guys, because in the Montney, they're basically king. And that's the basin that's going to supply these new LNG facilities, meaning they're probably going to be most directly exposed to some of the major benefits. The second name on the list here is ARC Resources. And these guys are a fantastic option for a couple key reasons, including the fact that they are so ridiculously undervalued for what they are. Now, they've had a couple of things going on in the sort of short term, and I'm talking like operational things, not quite as efficient as you'd want them to be, right? They have not necessarily kept up with again, if you're an analytical person, you're looking at it from a position of like who can return the best free cash flow off the least investment, carry me through the bear markets with the very best and most ruthless efficiency. Again, you're probably not looking at ARC, but they have made some key acquisitions over the last year that I think are going to massively benefit. Again, they have that torque to the upside kind of potential. When things start to move upwards, these guys are going to move upwards faster than some of those ruthlessly efficient companies that have better pricing right now. And again, I think that story is hugely important, but they also have some key things going on. There was announcements just this week that some of their key projects that they're partnered with, like Cedar LNG, are being not just, FID, it's not just being built, it's actually being expanded upon. There's more money going into that. And they do have a strong relationship with the Haisla Nation, which means they are in a good position to be a supplier to a new facility, like whatever the new Kitimat LNG might be called, which does put them in a gigantically beneficial position. Because those LNG facilities, if you can get one of those contracts for, let's say, 15 years, that is great free cash flow locked in. And those kind of price, you can't beat that in this industry right now. That kind of long-term sustainable free cash flow is king. And they would be able to return to you a fantastic dividend basically forever with deals like that, right? You would have decades of gigantic profitability. So if they can get in on some of those deals, they can be there supplying things for both Cedar, which is now going to take on some more. They might get their deal actually bumped up with them, and you can see some big boosts. Obviously, they are exposed to things like the massive improvement in AECO pricing. They will benefit a gigantic amount from that. You'll see hundreds of billions of dollars in free cash flow over the long run from higher AECO pricing. If you see that differential change, you're going to see these guys benefit out just beyond basically what anybody else is going to. And I think, again, their strong relationship, their sort of tie-in with these projects already, they've done a good job of that. I think they've shown that they are, if not the industry leader at making themselves a supplier of West Coast LNG, they're at least in the running to be industry leader, in the running to be the best company at getting those deals done. And I think that puts them, they're on my portfolio for sure. They're definitely a stock that I'm holding. I'm not looking at them as being necessarily a jump in the next year. I do think that they, again, kind of like Tourmaline, when you see these projects get FID'd, you're going to see the stock price move. When you see the next move and the next move, when you see the AI facility get built, when you see whatever the story is that's bullish for natural gas in Canada, obviously the stock's going to move. Maybe not as much as Tourmaline. You're probably not going to see the same institutional interest in these guys. A little bit further down the chain, we're at $14 billion, right? A slightly smaller company. But I do also think that means the opportunity is here for longer term free cash flow at a slightly cheaper price. So if you're interested in that, you want to be part of the Montney story, you want to be there for this massive improvement in LNG, I think ARC makes a lot of sense, right? I mean, I own it. Might be worth taking a look at. But there is also a third company today that I think offers something completely different. Third company I want to talk about today is the second largest natural gas producer in Canada. It's Canadian Natural Resources. I feel like I can't go a day without talking about these guys. And to be fair, that's because they sit in this interesting crossroads where they not only are a gigantic oil producer here in Canada, they are now the number one oil sands stock, and they're being benefited from that. Made a video earlier this week, just on Saturday, talking about why these guys and the industry there in the oil sands is getting so much institutional money. Why the pricing you can get for guys like this is ridiculous, and why investors need to pay attention, because pension funds and institutional funds are pouring billions of dollars into stocks like this at a cyclical low, trying to buy against the cycle and catch that gigantic bull upswing in the price of oil. And obviously that price of oil is going to have a gigantic impact on the company. We are talking, again, hundreds of billions of dollars in long-term boosts to free cash flow. But they're also the number one supplier of natural gas in Alberta, which means that those AI data centers aren't just a theoretical boost in overall pricing for them. That is a direct boost to the bottom line immediately. And if you think about what that means for them in the short term, that means that while everybody is looking at doom and gloom oil glut right now, these guys are looking at ways that they can be part of new deals providing natural gas, proving to basically just gigantic. They're going to have these gigantic contracts on these long-term investments. Think about the amount of money that goes into data centers. I mean, there's one in Texas right now that is looking at building somewhere in the range of 25 to 30 turbines, natural gas, electricity producing turbines, creating up to a gigawatt of electricity. They're building stuff like that all over right now. And a lot of those things are being proposed up here in Alberta, where CNQ is the largest producer of natural gas. They're going to be there. They're simply going to be there for that. And they're going to be there for every single storyline about new projects in the sort of Gulf, because they have this long-term, just this staying power. That's the best word I have for it. They have this long-term staying power that investors are paying attention to. Companies internationally looking for long-term supply of natural gas because they're building these either new LNG facilities here for export, or of course, facilities for import, electricity producing facilities worldwide. They're looking at CNQ because these guys can produce this stuff functionally forever. They've got a lifetime of reserve here, and they can produce it at a fantastic price because it's basically a byproduct for them, which is the craziest thing. Their business doesn't even need it, and yet they're going to have a huge amount of profitability over the long run because of their exposure to this natural gas business, which is gigantic. And if you're looking at, maybe a less of a short-term bullish on LNG play, and instead you're looking at how can I get in on the long-term free cash flow? I get my dividend, I reinvest it, and I ignore it. I ignore it for maybe a decade. This is probably the name, because these guys, unlike the Montney producers, these guys basically are invincible. These guys are just going to sit there. They're functioning on two different time frames right now, which means you're not going to see the gigantic volatility in stock price on one commodity of natural gas or on oil. But when you see those things climb, you see the long-term prospects grow, these guys are going to probably be the biggest beneficiary. Also the scale player. So there's just about zero risk of them being acquired. I won't say like literally zero, because there's always a chance that, something crazy happens and, maybe Berkshire wants to spend one of their hundreds of billions of dollars, but unless somebody's spending that much money, these guys are safe, which means that you can hold on to it, throw it into it's in my RSP, right? That's an idea, right? Throw it in there and don't think about it. Throw it in a TFSA. It's one of those kind of stocks that you can sleep well at night. You can ignore it in your portfolio. And honestly, in a time when I've got, up to 40% of my portfolio in S&P 500 companies, and I'm looking at them and everybody's getting a little nervous about the AI bubble, it's really nice to have something like CNQ just sitting in the portfolio to be, if not a hedge, then kind of a backstop, right? Really quite an awesome company. That and the fact that, look, they're paying you like over a 5% dividend yield right now. Who doesn't like that, right? So a fantastic company. I love all three of those companies. I do own all three companies, right? I think each of them serves a different idea for different investors, focusing on different things over different timelines. Each of them has unique factors, and they are by no means the only companies that are awesome. They're just ones that I personally own. So I feel the most qualified to talk about, and I've sort of built my own bull thesis on them over time. I would love to hear from you though. Which companies are you buying in this area, in the Canadian natural gas space, right? Who do you think are going to be the long-term winners? I've seen a huge amount of discourse about Peyto versus Tourmaline in the last couple of weeks, I guess. Even longer than that, sort of, there's been this long-term discussion, but been kind of heating up. Maybe I'm interested in talking about that. Let me know if you'd be interested in watching that video. And of course, if you've got, any thoughts about this Kitimat project, I would love to hear them. Right? Is it going to go ahead? Do you see people investing in this? Are you worried about maybe like, what is the point where we invest in too many of these projects? Right? Really interesting thoughts. I'd love to hear yours in the comments down below. As always, if you like this kind of content, you like what we do here on the channel, please do like the video. If you like covering these Canadian topics and talking about these things that nobody else is talking about, please do subscribe. And I hope I see you in the next one.